This is Tony Mendes, Certified Mortgage Planner, with the top 5 reasons to refinance. Today's lower mortgage rates are offering many opportunities for homeowners to refinance into lower rates. But this isn't the only reason to refinance. So what are the top 5 reasons to refinance? Number 1, of course, lower your rates. The rule of thumb is that your rate should be lowered by 1%. On a $200,000 loan, 1 percentage point is equal to about $120 in savings a month, or $1,400 a year. But there are other cases where the rate doesn't have to decrease by 1% in order to get those savings. By re-amortizing your loan that you've had for a long period of time, even small decreases in that rate can benefit large monthly payment savings. Number 2, changing your term. A common way to save money is to change the term of your loan. For example, if you're 8 years into a $200,000 loan on a 30-year fixed at 5.5%, you can get a 15-year at 4.25%. Your payments will increase only by $165, but you'll pay off the loan in 7 years earlier, saving about $95,000 in interest. Not a bad day at the shop. This works in reverse as well. Number 3, changing your program. This is a very common reason to refinance and possibly the most effective tool to managing your mortgage debt. If you're already in an ARM that has a fixed rate period shorter than your expected residency, the common theory is to refinance into a 30-year fixed. But if you're in a 30-year fixed and your time frame is within 3 to 7 years, because ARMs have lower rates, an ARM can save you thousands of dollars over that period. It all comes down to the comparison of rate you have and the rate you can get and your time frame. Easy calculations for your mortgage planner. Number 4, cash out debt consolidation. Using the equity in your house to purchase items or pay off debt has many advantages: possible tax savings, lower interest rate, extended terms, quick cash, etc. My favorite, though, is to pay off credit card debt. Every dollar of credit card payment is equal to about 33 cents in a home loan. You can improve your monthly cash flow, your credit scores, and have lower stress. And number 5, removing a borrower. Let's say you needed help qualifying for a house, or you purchased a house several years ago with somebody else. By refinancing, you can take over that new loan and remove that old borrower. The standard saying when refinancing is to refinance only when the payback period for the closing cost is lower than the time frame you plan on staying in that property. But this is not always the case. A person's long-term and short-term goals have to be taken into consideration when looking at a refinance. The benefit is not always clear, so talking with a mortgage planner, that's the smartest way to go. This is Tony Mendes with your tips on refinancing.